Meta Platforms Inc., previously known as Facebook, have just released their earnings for the second quarter of 2022. We are going to be going through these numbers right now and to see what that means for the company. We're going to be putting these in my stock valuation spreadsheet using the discounted free cash flow model and the Buffett-Graham intrinsic value model based on these new numbers to see if this stock is a buy or a sell. What is happening in the market? Well, the market isn't reacting really anything. Down 0.75% after hours to $168.30 a share. Now, this is Facebook over the last 5 years. It's been a pretty stably growing stock, hit its all-time highs of 376 and has then been hammered down 53%. But is this the time to buy? That is the question I'm going to answer today. First, we'll read what Mark Zuckerberg said. He said, "It was good to see positive trajectory in our engagement trends this quarter coming from products like Reels and our AI investments. We're putting increased energy and focus around the key company priorities that unlock both near and long-term opportunities for Meta and the people and businesses that use our service." So let's just touch upon the numbers here. We'll be talking about these in more detail, but you can see revenue is down, costs and expenses are up, net income is down, provisions from income taxes down, net income is down, and earnings per share are down. I'll be talking through these numbers in a second, but this is things that people care about. Family daily active people, you can see that the average was 2.66 billion, which is an increase of 4% year over year. MAP, which is family monthly active people, 3.6 billion, up 4%. I don't understand how Facebook keep on adding people. I don't use Facebook anymore, really, although probably log in once every couple of months, but the fact that this is still growing is crazy. The ad has increased 15%, that is good. Right, let's just talk about the actual statements here. So let's scroll down to the bottom. And here we are here. So firstly, revenue is down 29 billion as we saw to 28.8. So that is a negative. And we know that the cost of revenue up 16 billion to 20. So what does that mean in terms of the bottom line, the net income? 10.3 billion or 10.4 billion to 6.7. So that is down massively. And if you look at the 6 months, you can see it's down as well. Earnings per share, $3.67 to $2.47. Not looking good to start. So what we'd like to do is see if Facebook are buying back their shares. They are buying back their shares, 2.8 billion to 2.7. This is good because you own now more of the company's profits. But if we go back to the stock price over the last years, if Facebook were buying them back here, this is negative because obviously the share price has dropped. So if they're buying them back at this point, they should definitely be buying them back now, but it'll be interesting to see what they're doing. Now we want to look at the cash flow statements and we'll scroll down here. And how do we get free cash flow? It's cash from operating activities minus capital expenditures. And the net cash from operating activities is down 13.2 billion to 12.2, and CapEx is up 4.6 billion to 7.5. Now I'm not going to do the maths. I already did it earlier. 4.4 billion in terms of free cash flow. So if I go back to my stock analyst sheet here, we have everything here. We have Facebook details. We have analyst target price. 12 months they're expecting 180, average and this is on the low side, average 255, high price target of 466. Analysts are getting this wrong. PE of 12, earnings per share, obviously that's going to be dropping. Beta and the shares outstanding, they don't pay a dividend. I've got the revenues of the previous years, but we care about the most recent stuff. This gives the trailing 12 months 119 billion in terms of revenue, net income 33.6, and free cash flow 34.7. So it's down from 2021 except for revenue, which is up. So let's go straight to our earning valuations spreadsheet. I put in the most recent numbers, we're averaging them out, and let's see what this gives a value for Facebook. This will probably be, I would imagine, there we go. Wow. So $311 a share, and this is based on averages. So according to discounted free cash flow model, it is a buy. Let's look at the numbers and see if everything's okay here. Net income, free cash flow margins, I think that's okay. The revenue is slowing, so if this is with Facebook, you can see they grew 21, 17, 27, and now only 1%. If they can keep growing at previous numbers, then it's good. So let's go on the bear case here. Let's say it's 2%, and the net income margins I'm happy with. Even then, the stock is fairly valued, and that's if it grows at this rate over and over. And I don't think they're going to grow at that rate, so let's just increase it a bit more. It still has it at 232 a share. Next, we want to look at the Buffett-Graham intrinsic value model. What does this do? Well, it takes earnings per share and expected growth into account. Let's see what the analysts are saying about Facebook expected growth. Over the next 5 years, 7.53%. So let's add that in here. 7.53%, and that has a fair value of $358 a share and a Graham price, which is basically, if it goes this low, it's a buy and hold. Obviously, the stock price is lower than that, so it is a buy according to Graham. 268. So both of the models are saying it's a buy, which is interesting. And if we go back, market not agreeing right now, $166 a share. So both the models are saying it's a buy based off these earnings, even though with that slowing revenue growth and well, still growth though, but and decreasing profits and free cash flow. Right guys, thanks for watching. Please give a like on the video if you enjoyed it, subscribe if you're not already, and I'll catch you guys next time.